Welcome to Strategic Moves with Lou. I'm Mike Hendren, a local radio talk show host here in Wichita Falls, Texas. I'm also a licensed real estate agent. And the host of our show is Lou Italis. She's over here on the end. She is the owner-broker of Strategic Realty here in Wichita Falls, Texas as well. And we're glad to be back together with you once again. And Lou has invited some more guests into the studio. Who do we have with us today, Lou?
Well, we have First United Bank, and this is...
My name is Perry Curry.
And also with us.
Yep, my name's Bill Krutcher.
Yep. And we're glad to have Perry and Bill here with us. And I think we're going to talk a little bit about commercial lending today, were we not?
Correct, yes. The last couple of lenders that we had, we talked about residential loans
right.
and how that works. And for investors, it's always a good to know how to get that commercial loan for that investment property that you want to purchase.
Right.
And these here are experts at that process. So they've been doing it. I don't know, how many years have you been doing
It's been
this?
several years we've been around in this banking business.
Yeah.
Perry, you've been in banking, 25 years now?
At least.
Yeah.
Wow.
Well, I remember him when he was at a competitor bank.
Competitor bank.
That's where I met him some years ago. So.
Well, let me tell you, we're honored and glad we have Perry on our team over at First United Bank. Perry's a great lender, good commercial lender.
Yeah, he's the first lender that did one of my first properties that I purchased.
Yeah.
He's the first one that took me on as a client.
Yeah.
Regretting it ever since.
Well, we've seen some commercial growth in Wichita Falls quite a bit here recently, actually. In fact, I was just talking with our chamber president, Henry Florsham, today, in fact, and we were talking about the fact that we're kind of running out of large industrial properties.
Yeah.
100,000 square foot plus for people to move into. You know, we've got Pamlico Air has moved into town. Panda Biotech is another big commercial operation coming to Wichita Falls. And these companies are taking up all these big industrial buildings. I want to ask you guys, from a commercial lending standpoint, it looks like we're getting to a point where we're going to have to start building some properties around here if we want to attract some companies to our city, don't you think? Whichever one wants to take it, run.
Mike, you're right, and we have seen some commercial development here in the last few years, but not to the scale that we need to see. Yeah. We've had some new apartment complexes come in.
Right.
Thinking, what's the one over off Lawrence Road? But you're right, with new industry coming in, our housing, we've seen a slowdown in new construction in the last several years.
Yes.
But now we're starting to pick that back up. And to facilitate the necessary housing for these people, yes, we're going to have to start some new construction.
Well, Strategic is building a little bit here and there. We've got about 20 more lots that we need to build on.
Yeah.
But that's a little bit different than I think what he's talking about as far as like full-on commercial buildings. But what you guys mainly do is commercial 1 to 4. Non-conventional lending, correct?
Yes, that's right.
Okay.
That's right. Okay.
And then the difference between what you guys do and what let's say, is it Blake?
Slade Hodges.
Slade Hodges. He does the residential side of it, and he does the conventional FHAs and the VAs, so that he goes to the secondary market.
We look at it as owner-occupied and non-owner-occupied. We do basically the non-owner-occupied, whether it be multifamily, individual, single-family investment properties, that kind of
Okay.
And your guys' rates for like interest and stuff like that is pretty competitive with just a non-conventional type of loan. So your interest rates are like more. I know it's kind of hard to talk about interest rates because it's all based on the individual.
Right. They're not as low as the secondary market loans.
Right. Yeah, they're going to be a little bit higher. They're going to be probably like at least a point or two.
They're a little higher. Also, we only fix them for 5 years instead of 30. We'll amortize them over a longer term, 15, 20 years, but you don't get the 30-year fixed rate on these investment properties.
But Perry, I think that's a good point that you ought to maybe explain. Talk about why we only fix a loan rate for 5 years versus a 30-year note.
Basically, the bank does not want to take that long-term interest rate risk. So we'll, at the end of 5 years, assuming everything's great, you've made your payments, all we do is sit back down, figure out a new rate for another 5 years, and go down the road. That process is pretty simple.
Do you guys ever see that rate go down?
Here lately in the last, if you would have got a loan 5 years ago compared to today, you'd be in good shape.
Yeah, yeah.
Or you'd like the bank a lot now. There's been years past where it hasn't worked that way, but the rates have definitely gone down.
Yeah.
Oh, wow.
Yeah, I remember the first one that he did for me, he did it like 6%.
Wow. Gee, Perry. Well, and the reason we do that, I'm sure you guys remember back in the 80s, the savings and loans crisis.
Oh, yes.
Mm-hmm.
You know, so you had your savings and loans going in or fixing these long-term rates at a low interest rate, and we entered an inflationary period in which we saw the yield increase, and all of a sudden we got inverted on these, and then basically the savings and loans were upside down and insolvent.
Yeah, we saw a lot of failures back then. A lot of people lost a lot of money, and a lot of damage was done. And it took a little while to recover from that.
Sure did.
Yeah.
I think some people went to prison.
They certainly did. There were some rather unscrupulous things happening back in those days.
And so,
And Perry, you'd probably remember that better than I would, because in the 80s, I mean, I was only in elementary.
I was a baby.
Oh,
I was in Columbia by then. Okay, so the difference mainly on what you guys do and what
Slade.
I don't know why I keep on thinking Blaze for some reason, but anyway.
Well,
all right, so
Well,
what
he did
Slade
play
does.
football at Tech.
Yeah.
He was a Blaze back then.
He was a
That
Blade,
might be it.
and his brother is Cody Hodges. For those who are Tech fans,
Uh-huh.
I mean, his brother was one of the leading passers of the air raid offense during the Mike Leach era, and I think he's like number 6 in the nation in total yards. So
Wow.
we sure ought to give Slade a hard time about that.
They're twins, by the way. So that.
Oh.
This is how you know we're professionals, folks. We went from real estate to Sports Center like
5
that.
seconds, yeah.
We're going to tell you everything we know in about 20 minutes, so we got to fill the gap.
I got you.
So that this, okay, so I've always wondered why it goes to the secondary market. Like, for instance, why you guys do a conventional loan and then turn around and sell it to an investment group of some sort or an investor, and it goes out, like now that loan is no longer in-house. Can you kind of explain that to our listeners of why that happens? Because, I mean, it can be kind of frustrating for a buyer for that to happen. I know it doesn't happen with your guys' loans because all of yours are non-conventional in-house loans.
On our investment, yeah. I think it goes back to that 30. Most of them are getting 30-year fixed-rate loans, which the bank does not want to keep in-house. And it benefits the borrower for sure to have a 30-year fixed rate. So
and it frees up your guys' capital or your guys'
we get our money back and go and do it again.
Mm-hmm. So you can do more loans.
Right.
All right.
And
that explains it.
And it's hard. As a buyer, you're frustrated going through that underwriting process and having to supply the documentation
And the paperwork.
and it's basically, you've got to verify everything because it is going to the secondary market to an investor who is actually buying that loan.
Yeah.
And that's why we have to prove up.
Yeah. And all those letters of explanation and
Yes.
And once it's done, you got 30 years to make your payments. You don't have to do it again. Maybe that's the benefit of selling it off because the bank keeps it, and we're going to ask for that same information again in 5 years.
Yeah.
Right.
Yeah.
That's true. Yeah. Whenever you guys do your they wouldn't necessarily be considered arms at that point, are they?
Not necessarily. Our note comes due, so I mean it could legally be called, but obviously we want loans. So the deal is it's an interest rate situation.
Yeah.
Right. Okay.
Yeah. It can be a complicated process, but really and truly it, like Lou was saying, I think some people get confused about just some of the fine details of it. It's hard. Sometimes it's hard for people to understand exactly why you have to do it the way you do it. Yeah.
Our underwriting is not near as what's the word I'm looking for a secondary market. And we're going to basically get a personal financial statement, tax returns, and we pull credit. We're going to look at the individual property. We want it to cash flow. Mm-hmm. And it's a pretty simple process. Maybe somebody providing all that doesn't think so, but
no, it's actually not that bad. I mean,
yeah, you give us the information, we look at it and make a decision pretty quick. And
if you're just getting started in this process, then it is not going to be very complicated because your financial statement isn't going to be so cumbersome. You're not going to have 20 or 30 properties to keep track of. You're just going to have the one or two or none. So, you know, I mean, from a new investor type perspective, getting an in-house loan, the advantages are that some of the paperwork and some of the process is not as complicated as if they were getting that regular conventional loan on the secondary market.
That is true. Yeah. Most of the time, the issue on a new person getting in the business is going to be the down payment. Secondary market, you can get in for, 3%, 5%?
Right.
On investment properties, it's going to be 20 to 25% is going to be what the bank's going to want.
And that process changes on a regular basis. Sometimes it's 20% of the market value, or appraised value, and then sometimes it's 20% of the sales price. Correct? Or is it like lower of the
generally
two?
on a conservative side, you're going to say the lesser of the two.
Right, the lesser.
So sometimes you can go get an appraisal on it for $100,000 on a house you're paying $70,000 for. In the bank's mind, it's worth what you pay for it, not necessarily what
it's appraising at.
Yeah.
So they're going to you're going to still want 20% of $70,000.
Correct. We're going to the lesser of the two because, like I said, it's not worth more than what. In our mind, it's not worth what it's worth. What you pay for it.
That's the rule of thumb when it comes to appraisals. Anyway, I mean, it's only worth what somebody's willing to pay for it.
That's right.
That's why some of our appraisals come in at the sales price. You want it to come in at above the sales price so that you have some built-in equity, but it doesn't always work that way.
Yeah, and have you guys found that appraisals in recent years has the appraisal process or the values gone up that much? I think the perception is that they have gone up significantly, but is it as significant as maybe we think it is?
You know, Mike, to answer that, it really comes back down to supply and demand.
Yeah.
You know, right now, as you guys know, being realtors, there's nothing. Yes, there's nothing. Yeah. So, I mean, we're going through
lint out of our pockets.
Yes. Well, we're going through a transitional period where we're seeing these values increase, which in turn, the market values are increasing. Right. You know, we're seeing properties being valued at $150, whereas 3 years ago, might have been $100,000 properties.
Right. Yeah.
So the only thing that concerns me, and we've seen it back in 2008, the housing bubble.
Mm-hmm. Yeah.
Are we entering that phase again? I don't know.
It's kind of hard to tell. I mean, you would have thought that with a whole year of the coronavirus affecting us, that our market values would have tanked. But it just seems like it just keeps going up and up and up exponentially. I mean, I've done property assessments, BPOs and stuff like that wind up showing a 34% increase in 1 year to the next.
Well,
or,
you look
a
at
few years to the next.
You look at construction also. I mean, the people that I've talked to that are in the business, whether it's residential housing or even commercial construction,
the cost of lumber is just astronomical.
They're busier. These guys are busier than they've ever been.
It's been crazy.
It really has. And you talk about the cost of lumber. I'll just give you an example. A few days ago, I'm at a local big box hardware store. I won't say which one because they're not sponsoring the show. But anyway, I'm at a local big box store. 7/16 4x8 sheets of OSB. That's typically when you put up a new structure now, whether it's a house or even a commercial thing, that's what you're sheathing the building in. You're skinning the building in OSB as opposed to plywood. That stuff was $10 a sheet 2.5 years ago, 3 years ago. $35 a sheet. That is a tremendous price jump. Yeah. A 92 5/8 stud, a 2x4 that you stud a wall out with. Yeah. $6. They were $2.25 2 years ago.
Yeah, absolutely. Yeah, Mike, I tell you, they've even gone up more because I bought 8 of them for a deer stand for my son last week. Heck, they were $7.98. I about fell over, and I thought, "Oh my gosh!"
And that impacts your industry as well because now someone comes to you and let's say they're doing some kind of new construction. Now they got to go deeper. They got to go on the line for even more money. You got to go on the line for more money because the cost of getting that structure built has gone up so significantly in just 1 year.
Yeah. Well, it changes drastically too. That someone would start a home. Get to that point where we need the lumber. They price it out a month ago. Now the price has gone up 10%.
Right.
Yeah.
So talking to my buddy in the lumber business, I mean, it's an ever-changing
Yeah.
He's never seen it higher, he said. And he's been in the business 30, 35 years.
And I did talk to, because we are in construction too, so I did talk to the lumber people as well, and they basically explained to me is that it's not so much that they can't get the lumber, it's that the regulations on how many hours they can operate at one time to produce the lumber is because of the coronavirus restrictions, and they have to clean everything up every 6 hours. They have to sanitize everything, and so that and they can't be full 100% staffed at any given time. So those restrictions are making it harder for them to produce the lumber, and that's bringing up the prices.
It's putting tremendous stresses on the industry.
Yeah, and then you had the
Had
fires.
the fires out there. You had the corona where they shut down the plants for 3 or 4 months, whatever it was. And like you said, now they're back open, but they still have the restrictions.
Well, if you go to your favorite lumber location today and you pick up a 2x4, 2x6, whatever, 1x4, chances are it's got a tag on it that says made in Finland or made in Sweden. It's not domestic lumber. We're importing it. And that, of course,
meet the demand.
Yeah, and that pushes the price way up because getting it halfway around the world is expensive.
Absolutely.
That's an expensive process in itself, just moving it. Right. So, there's a whole lot of factors that go into this. It's, I think you guys you probably have the most complicated part of this process in the construction business. It's the lending part of it. That's got to be the most tedious.
Yeah, my main frustration is the appraisal process.
Yeah,
because it's so hard. Like, I'll get a request to do a BPO, I can't find the comps to justify sometimes the hike in these sales prices.
Right.
I mean, I made an offer on a house for one of my clients, and we offered $10,000 above asking price. He wanted to go a little bit higher, and I had to tell him, I don't think it's going to appraise for that because there's just no comps in the area. So if we offer that, we might get the deal, but then the appraiser the appraisal is going to come back. And then, are you going to be able to make up the difference?
Right.
Yeah. We just had that happen with some lady.
We did.
It was a higher priced home, but she put in her offer for this, and the appraisal
didn't meet it.
Didn't work.
Didn't work, and the appraisal was done by a very well-respected appraiser. I mean, one of the ones that I feel like is one of the better appraisers here in town. Which we've got a lot of good appraisers, don't get me wrong. But you could take his values at faith and know they're good.
And the comps just aren't there. I mean, until this cycle of sales kicks in and they start to sell for these prices, and a lot of the offers that we're getting that are selling for those higher prices are cash offers. So that's kind of throwing a monkey wrench into everything. Yeah. So those kinds of comps we can use, but that's not real true value either because they bought it for cash. So it may not be worth that.
Right.
So it's just like this weird domino effect that we're seeing right now in the market.
Yeah. To me, with the low rates, it's kind of like people when they go buy a car, they don't really care what the rate is. Just tell me what payment I have so that you can back into your payment for a house, and you can buy a lot more house at 3% than you can at 5%.
Right.
So people are saying, well, if I have to pay more, this is what payment I can afford. Let's do it.
Yeah. 2 years ago, they couldn't afford a $150,000 house. Now, with the interest rates the way they are, they can, and they're looking for those types of houses, and there's just nothing on the market.
Well, you've got a lot of properties, residential and commercial, that have seen their tax valuations go up significantly.
I don't even want to think about that.
I think everybody thought it was going to go down, like you said, because of the corona.
Yeah.
I think it's done exactly the opposite. People are going to be shocked next year.
Next year it's going to be a bloodbath.
I'm talking to people that have seen their valuations, and I'm talking both residential and commercial properties that have seen their valuations jump, $10,000, $15,000, $20,000
in 1 year.
In one single year.
And it's going to get worse. I can guarantee you it's going to get worse. Yeah. I mean, last year I paid $25,000 in real estate taxes. This next year I'm planning for 35.
Yeah. You're starting to look around going, can I really afford to sell a kidney? Maybe.
When you're right. In planning.
I already went through the change, so I can't sell my ovaries. But, if that was still an option.
Change.
Well,
I'm not touching any of this.
A little too far.
Nope.
Perry, you're turning red.
Sit over here.
Doesn't take much.
No,
That's why I sat next to mine.
I knew
what I was getting into.
I'm glad I'm on the end. I'm safely.
Didn't think we were going to go that route.
Safely out of the way here.
No, okay.
What exactly did we lose control of this show?
How used to that? I'm not sure how that happened.
Anyway,
So if you're looking to buy commercial
I
property,
could sell a grandkid maybe. No, my son would kill me. But
what were we talking about here? I don't
property taxes,
property taxes and increase. But
yeah,
as far as a good investment, well, think about it, guys. So say you started buying investment property, 1 to 4 family, 10 years ago. I mean, it's been a pretty good investment for you.
Yeah, you could get something for $25,000 or less. Right now, you can't even sneeze at something for less than $50,000.
Yeah, and from a commercial standpoint too, you're looking at we're seeing another empty retail space fill up here in Wichita Falls, the former Brookshire Brothers grocery store on Loop 11. Finally, after years of being vacant, it's got
the HVAC company or the HVAC.
It's a plumbing company, plumbing supply company that's moving in.
I thought it was a HVAC supply.
It could, maybe it is, but I was told plumbing. Okay. But it's finally someone's moving into that structure. But then we're going to again, go back to where we started here. We're going to start to run out of those retail spaces, those big ones anyway, those big industrial spaces. Those are going to start to dry up quickly.
I've already got many clients that are looking for spaces, and there's just nothing out there. Yeah. I mean, even Schallenberger can't keep up.
Well, I mentioned Henry Florsham, our chamber president, a little while ago, and he said there's a couple of big commercial deals that Wichita Falls lost out on last year because our industrial park didn't have the infrastructure yet in place to support construction of a new facility there. That's coming. That's in the works, but it wasn't there yet. And so those companies went to another community that had such spaces available, but the infrastructure was already in place and it was build ready for them. Right. So we missed out because we simply had not caught up yet on that end. So, maybe once we get that infrastructure in place there, that's going to kick off some commercial construction, hopefully, for our industrial area there.
I think I'm very hopeful that this next year or maybe even 2 years from now, we're going to see a pretty good, healthy market. Yeah. Simply because, there's a lot of things happening in Texas. We're getting Tesla down in Austin, and hopefully some of all of that's going to trickle up somehow.
Well, and like you guys just said, there's a different feel in this market than what we've had in a long time.
Yeah.
We've got some stuff going on.
Yes.
The guys at the chamber, they've done a good job. We've got stuff coming in.
Yes.
And, the new schools, that's going to help us.
I wanted to ask you, both of you about that. There's been a lot of talk about that, and I don't mean to dominate the conversation here, please, but there's been a lot of talk about how these new schools are going to help attract more people to our city. From your perspective as lenders, do you see that as strong a positive effect as some people have sold it to be?
It could be.
In my opinion, Mike, yes, I do. Because when these manufacturers come in, new industry comes in, what do? They bring their people in. They mystery shop. Yeah. They bring the parents in and say, do you want your kids to go to school here?
Right.
Look at that.
They're shopping for the community.
The only problem that I think is if we don't have, if when these schools are ready to go online and we don't have the residential available for these outfits to kind of move into our town, then we're going to have a problem because, we're already seeing such a huge supply and demand issue. Right. So if I don't know how many years it's projected out that these are going to be finished, but if in those 2 years or 3 years or however long it's going to take, we don't get the residential side of it figured out.
Yeah, I think they're looking at 2023 as the first year. So we're every day we get a little closer to it, and there's another bond issue coming up in May for the athletic facilities for these 2 new schools. Because that has to be a separate bond issue when they vote on that. And so, I think when the census numbers come out, guys, in September, they're due out in mid to late September, I believe. They've delayed that because of coronavirus and some other factors. But when that comes out, I think Wichita Falls has grown a little bit. I don't think we've grown by, 20,000 by any stretch, but I think 2,000 or 3,000 is not an unreasonable assumption that we've grown by that much.
Yeah, Mike, I agree. I agree with you. And you're seeing it by looking at the area, especially residential, Archer City. There's not a lot of available property in Archer City. Same thing in Holiday. Same thing in Iowa Park. Same thing in Burke.
It's like a perfect storm right now. We're in this perfect storm where a lot of people are. I mean, maybe it's because of the coronavirus too that it's happened this way. But a lot of sellers aren't coming on the market because they're afraid that they're not going to find something to replace it, or they just don't want to move because of the coronavirus.
Right.
So that, I think, has created a little bit of a vacuum. We have the same amount of buyers that are wanting to move because in general we usually have a pretty good buyer market. But right now we have a seller's market to the extent because we have so little inventory. Yeah. But now once people start getting a little bit more comfortable with listing their properties, whether it's to investors that are going to be buying it or to single families that are going to be owner occupants or whatever, that's going to free up a little bit of this panic or this, it's going to be a domino effect. Right. But it's just been crazy.
Well, Lou, I think the future looks bright for these guys. I really do. I mean, when you look at the things that are some of the changes that are happening, and the momentum is there. And like you said, as these companies come to our city, they're going to bring people with them. They need houses to buy, so we need
prepared for that. Yeah,
we need more listings. We need more houses for sale, but we need more construction, and residential and commercial construction. So it looks like it's going to be some good times for you guys going down the road here.
Yeah, Mike, we sure think so, and that's why I would recommend for your listeners to holler at First United Bank, holler at Perry or myself. Anything we can do to help you, give us a call.
Assess the situation at the very least.
Absolutely.
So you can make a game
we
plan.
do the real estate, but we're a full service bank. We do lines of credit. We do equipment purchases. I mean, we're a big time bank. We do all kind of lending, not just the real estate, but vehicles. that.
Yeah.
And I'd like to mention, a lot of people in Wichita Falls, they have never heard of First United Bank.
Yeah.
And
where are you guys located at?
Yeah, so we're located over in Parker Square, across from Jason's Deli.
Yep.
The bank is 115 years old. Very strong in capital. We're about $1.5 billion in assets. A lot of people didn't realize that. We have 15 locations, primarily through Wichita Falls back west.
Yeah.
We can service all your banking needs.
That's great. So you're there, and it doesn't cost you anything to go talk to these guys, and like you said, assess the situation, find out what they can do for you.
If you have investment properties that you already have, and you want to get a little bit of the capital out of or the equity out of it, or you want to refinance to get a better interest rate or whatever, you guys are.
We do that also.
Yeah, if you want to use the equity in one property to buy another property, holler at us.
Yeah, that's a smart way to do it too. I mean, you can. Leverage what you've already got.
That's right. As long as you don't leverage too much.
Right. Yeah. But within reason.
Within
reason. Yes. But
that's our job to keep you within reason.
Exactly. Well, that's why you guys are the professionals in this business. You can tell people, okay, look, that's a bridge too far. We're not going there.
A lot of people don't understand that. I mean, that's our job. We're here to help you and to protect you.
Right.
We don't want to get you in that situation where you shouldn't be.
Well, you want that investor or that commercial client or homeowner or whoever, you want them to be able to make money down the road on what they do, and you want to make money.
Absolutely.
So it's to everyone's benefit that everything's done in a very efficient way and a smart way. That's the thing, doing things smartly. Work smarter, not harder.
Exactly.
That's my favorite motto.
It is.
And then the oh my gosh, my brain just went completely.
That's all right. Perry, take off.
Go for it. When it comes to refinancing and stuff like that, the process is going to be very similar to when they first got the loan, correct?
I mean, it all starts with us with getting the financials, the tax returns, information on the property, obviously what you owe, what you're looking to refinance, appraisals, valuations come into play.
Mm-hmm.
Right.
I say it's a pretty simple process when compared to the owner-occupied.
Yeah.
But,
it's a little bit simpler, too, because you guys don't always order full-blown appraisals. Most is there
depending
like
on the
cap?
loan amount? Yeah. I mean, we generally 150 less. We can do an internal, saves a lot of money.
Mm-hmm.
Yeah.
Try to make the process more simple.
Yeah.
Well, the foreclosures nowadays.
Oh.
I mean, I do Fannie Mae, I do Fannie Mae foreclosures, and I haven't seen a single, one in the whole entire coronavirus time frame. So do you think that opening up all of these foreclosures is because, I mean, a lot of investors are kind of waiting for that to happen, for the foreclosures to start coming on the market so that they can purchase them. So you might see more of an influx from investors in that sense once the foreclosures.
Yeah, with all the government money, I guess, helping these people pay pay some of the rent or some of the rent forgiveness. That's going to play. It's going to be interesting to see how that all plays out.
If they do mortgage forgiveness, I mean, we're all.
I haven't figured that out for sure. So.
Well, the first step in any of this process is to pick up the phone and make a call and make an appointment to come in and talk with you guys, right?
Yeah,
Absolutely.
All right. So how do they get in touch with you?
Yeah, so you can call either Perry and I at First United Bank. Our number is 322-9900, or just stop by. Stop by and see us, man. Doors is always open. Glad to see you.
9 to 5, Monday through Friday.
Actually 7 to 5. So
7 to 5.
Yeah.
Oh my gosh.
Now, the bank hours are 9 to 5, but Perry and I.
Don't force your way in after 5. That would not be legal. So anyway, well, guys, thanks very much for being with us.
Well, you
Thanks
bet,
for
guys.
having us. Thank you for joining us.
Thank
It
you
was
all.
exciting.
We'll see you next time for another edition of Strategic Moves with Lou. We'll see you then.